Hi, thank you for joining us for our live webinar on smart investing in Singapore. As mentioned, this is Eric Lee. I'm a sales director with Phillip Nova. If you have any technical issues with the app, please type help into the question box and my colleague will assist you. Also during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. Please find attached the disclaimer page. Just take note that later throughout the webinar, you're going to see some examples, some charts, some stocks name. Just take note that these are for educational purpose only. Before you proceed to invest in them or trade in them, please check back with your financial advisor or with me. Just a quick introduction of myself. I'm Eric Lee here. I joined Phillip in 2004. Currently a sales director at Phillip Nova for more than 17 years, about probably close to 20 years in the industry. So constantly I'll be always conduct seminars and also sending out research ideas to my clients based on the strategies that I develop. So this is my QR code that you can, if you're interested in one-to-one coaching, you have any questions regarding the investment topic or trading certain markets that is not covered in this topic, you can take a picture of the QR code, you can scan it, and you can register for a free one-on-one coaching session. Just take note that this is the presentation scope for today. So the first portion will cover a little bit on the macroeconomic of Singapore market, what's the outlook like based on certain indicators. And then subsequently, we will move on to the main topic of today, which is smart money investment strategies. So just be sharing with you some strategies that you can employ or some tools that you can employ to better have a better outcome in your investment journey. And then we'll be covering some potential stocks, trading ideas. And lastly, before we end, we'll just be introducing some of the services that I provide. And one of it is in regards to smart money investing. Okay, so let's just get started. Firstly, the Singapore economic outlook and market trend. Many a times that we read some investment books or we attend some courses, often you may hear that the stock market is a leading indicator for the economy. But I think it is, in theory, this is so, but in actual fact, in actual trading, the two are pretty interlinked, right? You can't really say that only one leads the other or so. They are quite correlated in that sense. And I will show you what I mean by that. So firstly, when we talk about the economy, whether is it Singapore economy or like Malaysia or globally, we always refer to this term called the GDP. GDP stands for Gross Domestic Product. It's commonly used to measure the strength of an economy of a certain country. And there are basically three methods of measuring the GDP. So in Singapore, the government basically uses all three, and but most of the time, the method that they focus on is this method whereby they will measure the total value of goods and services produced and in a given time, which is a year generally, and then minus off the value of those goods and the value of the material used or the product used in the production process. So in micro terms, if you can think of this as a company, it is something like our sales minus cost of goods sales. So it's like then you will get a gross profit. So to that extent, that is true, right? So this chart basically depicts the trend of the Singapore GDP from 1960 until 2022. So basically, since the birth of Singapore as a nation until now, you can see that Singapore has been gradually growing in terms of its economic strength. So as of this chart, the last reading in 2022 is, give me a minute, is at 466 billion, and this is in USD. But what is our current GDP reading as of 2023? Because now it's 2024, the 2023 figure is out. Okay, this slide is taken from the Singapore Statistics Department. It is being managed by the MTI, the Ministry of Trade and Industry. Basically, a lot of the slides you see today regarding the economy is taken up from this website. You can check it out. I think they have done a very good job in providing us with very valid data. And also the infographic is very nice. So over here, it shows the Singapore economy in 2023 as at the current market price. It stands at 673 billion, right? So it's 673 and 300 million. So it's basically 673 billion. So in US terms, US dollar terms, is about 480 USD, right? So per capita is at 113,000 per capita GDP. So the real GDP growth is 1.1% last year. Not too bad, considering that the last 2 years, the global economy is really struggling because of high inflation. And due to that, the Fed has been increasing interest rates. And interest rate is not, in a way, it's not a good thing for economy because it actually increases the cost of doing businesses, increases the cost of investment, because companies or corporations will need to take on loan, and then it will cost them more to take on those loans, to take on those debts in their business expansion. So, but generally, 1.1% real growth is not bad, because real growth basically means that you minus off the inflation. So so that is the real growth, right? So if you have an economy that is growing, say 2%, but the real growth is minus 1%, then it means that the inflation is the real inflation is higher, and inflation basically erodes value. So real growth is basically what we want to look at. Okay, this chart is taken from the tradingview.com. So it shows the quarterly GDP, real GDP of Singapore since 1990s until now. So okay, whenever we talk about GDP numbers, there are always two numbers that is given. One is the real GDP, the other one is a quarterly GDP. The real GDP is basically you only calculate once a year. So it takes a lot of resource to tabulate, to collect and tabulate such results. So it is really impractical for the government, and it actually will create more work for corporation if the government have always need to collect data from companies in order to generate the quarterly GDP data. So basically, they use some indicators. They are proven to work and proven to be quite closely related to the actual GDP, and use that as an estimate to report on the quarterly, meaning every 3 months, they will report on the quarterly GDP numbers. So you can see from those numbers that we can't really add on the past 4 quarters of this quarterly GDP data, and then call it a GDP, right? It doesn't work this way. So it's only used as a form of estimation. Okay, so but of course this topic, even for myself, whenever I look at such data, the purpose of using such data is really to understand the stock market. right? So it serves no purpose for me as an investor to know that the GDP is good, but what does it mean to me? What does it mean to me as an investor? That's the information that I'm more interested in knowing. So so based on that, we will want to use comparison, right? Comparing the GDP data with the Straits Times Index, the STI, which is the index that represents the 30 blue chip stocks listed in Singapore, right? So you can see that the GDP has been trending up quite gradually from 1990s until now. But then for the Straits Times Index, right, it has a pretty big swing up and big swing down. So in terms of usefulness, if you look at it, it doesn't seem quite useful at all. So we need to do some tabulation to the quarterly GDP data in order to make it a little bit more useful in understanding the impact of the GDP to the stock market. Okay, so what we did on the next chart is that we calculate the rate of change on the GDP, the rate of change over the past 1 year. So basically, if we look at the GDP, the last quarter, which is Q4 2023, we compare it with the Q4 of 2022. And by that, then you will get a percentage of change, whether did it go up higher than a year ago or did it go down, right? So the indicator below is the yearly rate of change of the quarterly GDP. So with that, you can see that there are more spikes, right, up and down when we do this tabulation on the GDP numbers. And every time you see that this rate of change GDP spiking down below the zero line, that basically also coincide with the period of time whereby the economy is having some form of a contraction, right? So contraction doesn't necessarily mean recession, right? But it does give us an indication. So a better comparison would to just lay them out side by side, right? So using the GDP yearly rate of change, I lay them out side by side together with the STI, and we can see much more clearly, right? The horizontal purple line that drawn is a zero line on the rate of change, meaning that the GDP has fallen as compared to a year ago, right? If it drops below the purple line, right? So, and you can see that every time that the GDP rate of change drop below the purple line, that is also followed on with downward move by the Straits Times Index. So over the past 30 years, from 1990 until now, there are probably 4 to 5 times whereby we see a spike down on the GDP rate of change. And always when it's spike back up again, it is follow on together with expansion in the Straits Times Index. Okay, but when the MTI, Ministry of Trade and Industry, when they look at our economy, they don't really just look at GDP and use that as a gauge on whether the economy is strong or not. So they actually have a set of indicators whereby they will tabulate the number to create an index. Basically, 2 indexes that they create. One is the composite coincident indicators. The other one is the composite leading indicators. You can see that the GDP is part of the component in creating this index, but it is not the only component. They do look at other things like employment, like retail sales, and so on and so forth, right? So, and this is not unique to Singapore. In fact, many countries, especially those many first world countries, do provide such data and such information because it is much more, it is able to paint a much more better picture on the strength of the economy. Because just now, as I show you on the GDP line itself, it is just um, um, pretty like a straight line up. So you can't really tell from there whether the economy is doing well or not. I mean, over the long term, it is up, but in between, whether is it a down cycle or up cycle, you can't really tell from the GDP alone. So by using these indicators, you are able to have a better picture. Okay, so this chart is being provided by SingStat, which is, as I mentioned, a subsidiary of the MTI, Ministry of Trade and Industry. So on the, it shows the period from 2010 to 2023. So how to look at this chart is that the purple line you see there is the coincidental index that I mentioned just now that uses about four parameters to which GDP, 4 or 5 parameters to which GDP is one of it. The small little dot there basically shows the quarterly GDP number, whether so if it is quarter to quarter change, whether there's a contraction or there's an expansion. So basically, when the dot is lower than the previous dot, so we see a contraction, right? So you will come across this term pretty regularly on the news on the media, which is the term technical recession. So by default, the definition of technical recession is 2 consecutive quarters of contraction. So meaning that you have one dot down, the next dot must be down as well, that in order for it to be a technical recession. So we can see that since 2010 until 2023, like for the past 13, 14 years, there's only one time whereby Singapore experienced a technical recession, which is during the 2019 COVID period. So you have 2 consecutive um, uh, contraction in the GDP. But of course, now we all know what happened. The government is forced to shut the economy down to prevent the spike in cases, and that really causes technical recession. But for the other times, right, you can see that you have one down and then the next quarter up, one down, the next quarter up. So no technical recession. So if as an investor, in a way, if we look towards this technical recession or the recession numbers or the GDP numbers as a guide before we decide on whether to invest in the market or not, we can find that it is actually not very useful because firstly, quarterly data comes out once every 3 months, and then usually about 2 to 3 months has passed before the previous quarters numbers has been reviewed, right? So not a very useful information, but with this coincidental economic index, it's able to paint a more better picture because it tells us the cycle the market is in. So for example, during this same period, even though Singapore had experienced only one technical recession, Singapore actually have experienced 3 growth cycles, right? The first one from 2013 to 2015, second one from 2016 to 2019, and then now we are in the third one, in the midst of the third one from 2020 until current stage, right? And also they experienced 3 period of low growth or downward economic contractions in that sense, even though there's the GDP number is still up, but economically wise is in a contraction. So one is during the European debt crisis. Second one is caused by the China economic slowdown, and the third is because of partly the US-China trade war, and also because of the COVID-19 pandemic. Okay, but if you recall, I do mention about the leading indicators, right? So MTI, in fact, had just done a study in last year to check on the validity of the CLI, which is the coincidental leading indicator, whether is it still a useful barometer for measuring market trend. Market trend, by market trend, of course, for them, they are not talking about the stock market. They are talking about basically the economy, right? The economic strength, what cycle is it in, right? And their study has shown that the green line, which is the leading indicator, is able to quite accurately pick out the market bottom or the economy bottom and the economic peak, right? Almost about 6 months on average earlier than the CCI, the coincidental composite index, right? So, so this is great news, right? As investor, because what we want to know is to have a leading indicator. As I mentioned, GDP is a lagging indicator. You get it late. But if from the economic data, you're able to generate a leading indicator that is able to tell you the peak and the bottom of the economy 6 months ahead, I think that is something that we can make use of to help to time our market, to help to improve on our investing. Okay. Okay, so as I mentioned, it's no use just looking at indicator by itself. You want to put it side by side with the Straits Times Index to give us a better comparison. So firstly, you can see at the orange line at the bottom is the composite leading indicator. So it's based on economic indicators, but yet because it has a foretelling component, is ahead, able to point to us the market peak and market bottom 6 months ahead. So we are able to make use of this information to actually help us plan our investment, right? And also, secondly, we can note that this indicator, there is more ups and downs, right? There's more swing, more sway. So it is much more useful that way as compared to just the quarterly GDP, which is almost a straight line up. And but similarly to the GDP is in the uptrend. So every bottom is higher than the previous bottom. So that also, of course, have to, because of the Singapore economy has been gradually growing, and that's why you have this impact. So on the assumption that our government continue to do their job, continue to look after the economy, continue to create opportunities, like the Taylor Swift concerts, to bring in proceeds, to bring up the economy, to bring up spending, to bring in tourists. Then this composite leading indicator, together with the GDP, should continue to go higher, right? So that is one the next thing to take note of. So like similarly, we can improve this indicator further by detrending it, right? When we detrend it, we are not, because we are generally not too interested in the trend, but interested in the peak and the bottom. So by detrending it, you sort of form an indicator that oscillates, right, within a lower and upper range, right? Something, for those who are familiar with technical analysis, this is very similar to what we use on the stochastic, right? The idea is similar, overbought and oversold, right? So whenever it's at the bottom, so it is a buy zone. Whenever it's at the top, it is a sell zone. But primarily, I do not use this. I will not advise using this indicator to sell, but I will do advise using this indicator to spot out for a buy level. So now next, we lay it side by side together with the STI to have a better view. So similarly, the purple line drawn here depicts the level whereby the index, the indicator, falls into the buy zone, right? So we can see that every time it falls into the buy zone, subsequently, it's follow on with the increase in the Straits Times Index together with the indicator as well. So since 1990 until now, we have 1, 2, 3, 4, 5 successful buy zone, which helps to pick up some form of market bottom for the STI. Well, of course, other than investing in the STI ETF, individually, it's also good that from here we can pick up certain stocks that may outperform the market, right? So, but generally, this indicator, economic indicator, give us an early signal. So next, now this is where we are in, right? See that the STI did not really fall much lower, but the economic indicator, the leading indicator index, is actually telling us that it is in the buy zone now, right? So that's offering an opportunity for the stock market to go higher. And why I think that this indicator works, because firstly, it is based on economic data, which is what the government is looking at. This is what they are more interested in, right? They will not be interested in how the stock market is performing, whether the stock market goes up or goes down. They'll be more interested in whether the economy is strong or not. So whenever the index falls down, right, to the low level, right, it also tells the government that it is time to implement policy that is expansionary in nature, right? If you recall, during the budget this year, uh, our DPM, Lawrence Wong, did announce certain pretty market-friendly policies, all in the bid of growth, especially in relate to our competitiveness in the tech sector. So that also is a key signal to one of us that to investors that the government will be implementing more market-friendly policies to actually spark growth, right? Okay, so apart from this leading indicator, there's also another indicator that you can pay attention to, and this is the business outlook indicator. So similarly, it's being collated by this ThinkStack. You can find this information on their website. So basically, what is this? This is basically more like a sentiment indicator, the sentiment of business owner. So and they will on a quarterly basis, the EDB actually does a survey with about more than 1,000 companies in the service sector, and they will ask them a few questions, and from those, it's actually very simple questions. I show you what they'll ask later on. And from those questions, they basically generate out a number. So basically, it's a yes and no question, up or down, right? So, and the numbers they get is basically by, for example, using the numbers up, that is up 19, minus off the numbers that is feeling the market or the economy not doing so well, which is down by 14. So then you have a +5, so which is here. So this +5 is still positive, but this +5 is less than the +9 3 months ago. So meaning that the business owner is still generally quite positive about the market, about the economy, but a bit less so as compared to 3 months ago. Right? So why the service sector? That is because Singapore economy is made up of 70% generated by the service industry. So the service sector, the service businesses has a lot more weightage to our GDP, whereas the goods producing or the manufacturing business occupies only about 24%. So that's why they asked this survey to these 1,000 plus companies in the service sector. So these are the 3 questions that they ask. Basically, first question is, how do you expect your industry to perform in the next 6 months? So for this quarter, it is Jan to June 2024. Next question is, how do you think your firm's revenue will change in the next quarter? So basically, 21% of the respondee says that it will go up. 62% say it's going to be the same. 70%, a little bit more pessimistic, say down. So the net number for this will be 21 minus 17 will be +4. So the next question is, how do you think your firm's hiring activity will change in the next quarter? So it is 16% think that they'll hire more, 7% think that they will hire less. 77% say still remains the same. So so there's a net change of +9. Okay, so basically that's how they do to generate the number, right? The business sentiment indicator is gathered from this first question shown here. So 19 minus 14 is plus 5. Okay, so this is an indicator, service sector sentiment index for the past 30 years, 1990 until now. So you can see that it goes all over the place, up and down and down. It almost seems that not a very useful data, right? But similarly, we need to massage the data and do something to it to make it more usable. Okay, so we normalize the data by removing the funny the ups and down movement so that it becomes a much more usable cycle, right? So from here, this one is used more as um, contrarian index. So meaning that when they are the most pessimist, when the business owners are the most pessimist, that's almost about the time that we can look to invest in the stock market, right? So it's a contrarian indicator, right? So yeah, so businessmen doesn't mean that they always pick the right time, right? Of course, if they are the most pessimist, sometimes it means that the worst is over. So similarly, let's lay this index side by side with the STI. And the green horizontal line I shown here is a point whereby they fall into the most pessimist territory, which also coincide with meaning that a buy zone for the STI. So since 1990 until now, so there are 1, 2, 3, 4, 5 times whereby they fall into the most negative pessimistic region. And then subsequently, when they start to becoming more optimistic again, there's also a period of time whereby the STI will start to outperform. So this index tells us nothing at the moment. It is not at the extreme end. So we shall see perhaps over the next 2 quarters, see how the readings go. But generally, not all the time you will find these points like with the leading indicators, right? But you can use them together. Given the weightage on the two, I will personally put on more weightage on the leading economic indicator than on this contrarian business indicator. But it's a good indicator, good to know. Okay, so I have also recently done a market watch video uh, um, with Phillip Nova and with Phillip Securities under Poems. So on this video, I also showcase another indicator, which is the export index. Remember that about 26% of our Singapore economy is made up of the manufacturing companies. So these manufacturing companies actually do export out, and from the export index, we are able to basically also have a gauge, have an idea of the strength of the economy, and that also quite correlates with the direction of the Straits Times index. So if you're keen to listen to my sharing about this export index, you can scan this QR code, which will bring you to my one-on-one coaching page. The video link is found right at the bottom. You can just scroll down to the bottom. And apart from this, there are other videos and other write-ups that I've done for this Phillip Nova. So they are all posted there. You can go there to check them out. Right. So now let's go on. So suppose that I think that now is the right time to look to invest, because the leading indicators has just informed us that it is in a buy zone. It's about time that the government will do something to spec up the economy. So what are the strategies that we can use to sieve out the good stocks to invest in? Of course, when it comes to stock investing, a very common school of thoughts, right, when it comes to the analysis method is technical analysis and fundamental analysis. So Benjamin Graham's quote, I think, quite sums up these two thoughts of investing, right? Which is to say, in the short run, the market is a voting machine. By the long run, it is a weighing machine. For those of you who are not aware, Benjamin Graham is the mentor of the very famous Warren Buffett, who is well known as Oracle Ohama, who make his billions just purely from selecting good stocks that outperform over time, right? So Benjamin Graham is often known as the modern father, the father of the modern investing thoughts. So to sum up, he mentioned about voting machine. The market is a voting machine. So when it comes to voting, voting is very much emotional based, right? So that's why every time during election times, right, it is the country is always very hyped up. Maybe not so much in Singapore, but very much so in the West, especially in the US. Yeah, it's almost entire year event, right? um, you hear politicians starting to talk about, share about their dreams, starting to attack their opponents, right? So from opponents becomes friends and friends becomes enemy. So very dramatic, right? So if because it's very much emotional based. So emotion is what drives the supply and demand. When you have extreme end of a group of people that believes in certain thing, it may drive up the demand, and the other extreme ends, it will also drive up the supply. So when it comes to stock investing, other than that being a company that you invest in, a company that generates goods and services, the stock itself is also a commodity to which they are being traded by traders like you and I. So when traders as a group believe in certain good news, even though the good news may not be real, right? But because more of them believe in it, believe in the hype, they may actually drive up the stock prices due to the increase in demand, right? So that is in short what technical analysis is all about. By studying the charts, studying the indicators, we are trying the chartist is trying to understand the sentiment of the market, whether it is in extreme fear or is it in extreme greed, right? To which extreme always shows that there's going to be a turn in the market trend, or that there are a start of a new trend, right? So that's what technical analysis is all about. But on the other hand, there's a group of investors who believes in the market as a weighing machine. So by weighing machine, you want to understand the value. You want to weigh the value of the company. So to do that, there are of course many methods of many strategies or analysis methods or theories of doing so. But generally, we can more or less group them into these three category, which is based on the financial reports that a company give up every single year or every single quarter. So that is a discounted cash flow analysis, which is based on the cash flow that a company generates. Basically, if a company were to generate more cash than it spends, then the company will be good, because that cash will eventually needs to flow back to the shareholders in terms of dividends, in terms of asset growth, or in terms of share buyback. So another way of weighing the stock is by looking at their income statement. So that is where we get the metrics like the PE ratio, like the price to earnings ratio, or price to sales ratio. For those companies that are not making money yet, we look at the price to sales ratio. Of course, there are much more ratios to look at to gather from the income statement. But generally, what companies looking for is to look for growth. That investor is looking for growth, looking for companies that can generate more revenues year after year, looking for companies that can keep their costs lower in relation to the revenue that they bring in, or to even reduce the cost. They'll be the best, right? Then lastly, asset-based valuation is by studying the balance sheet. Studying balance sheet, you study what the company owned and what the company owe. So by that, we want a company that they will own more than they owe, right? If a company own, which is the debt higher than their assets, then there's no good, right? Because that means that the company is in danger of going to default, right? If they run into cash flow problem, they're not able to raise enough cash to pay off the debtor, then they'll go into default, to which the assets will have to be sold off, right? So we want companies that have assets and good assets. In fact, in this day and age, IT age, right, we are looking at more and more towards these assets that is non-tangible rather than assets that is tangible. So that also in turn create another problem. So may I also introduce to you a third way of analysis that can enhance. If you are fundamental analysis, by all means, proceed. Continue is a good analysis method. If you are a technical analysis, it's also a good method. Continue to do that. But as investor and as trader, the more tools at our disposal, right? I think that you agree is better for us, right? Because it actually helps to keep us more informed. It helps to support our theory and our conviction. So this next analysis method I want to introduce to you is smart money analysis. So this particular chart here shows the smart money of the smart money index on Sembcorp industry. Sembcorp industry is one of the blue chip stocks in Singapore. So basically, the smart money are people who are buying or selling the stocks, and their actions of buying and selling, which more or less coincide with the share price. So and partly also they are also you can also understand that in terms of they are the one that driving the share price up or driving the share price down. So since 2020 until late 2023, or rather January 2024, the Sembcorp industry, the share price has grown from about 80 cents to close to $6 at one point in time, maybe about 580 in recent few months. So there is a return of almost 600% over 3.5 years, right? So during this period of time, the smart money had bought 600 million worth of the Sembcorp industry. So in all the charts that I'm going to show you next, that whenever I mention about smart money, it's quite universal. And so you can understand that the blue line are the smart money. The gray line is the price of the stock itself, the weekly price of the stock itself. So when the blue line is coming down, it means that the smart money is selling. When the blue line is going up, it means that the smart money is buying, right? So who are the smart money actually? Right? By smart money, we are actually referring to the people who are in this as a professional. So they are the prop traders, they are the professional investors, so they are the hedge fund managers, they are the fund managers, right? So they are the people who does investing as a living, right? So when we call them, when I call them smart money, do I really mean that they are super smart? Of course not, right? Individually, they are not all smart. Well, individually, there are times that some of them may probably make some very stupid decision, but collectively, you will realize that their collective actions are actually pretty smart, right on the dot in most of the time in moving the stock prices up or down. And smart money, they are local, but most of the time they are pretty international, right? They don't just invest in one specific location, but all over the world. And they will usually go to the region whereby they can find the best returns, or rather the best risk-adjusted return, the highest return with the least number of risks, right? So by them moving their funds around, right, in over the world, they will definitely leave traces, right? of where they move their funds to and where they invest to. So thereby comes this smart money analysis, which is to study and understand where they invest their funds in, and thereby understand the trend that the impact will be on a particular stock. So, but why does smart money invest? Many a times it could be due to economic force, right? Perhaps fiscal monetary policies or geopolitical forces like wars happening, what we have seen in the Ukraine-Russia war or the Israel-Gaza war. So that will also, and also like the U.S.-China trade war, right? That will cause the smart money to move their investment around. And but often I find that they often invest based on technological trend. Like probably 10 years back, the trend is in renewable energy. So that's when the most of the funds will go into the most investment happen. Then comes on to EV, electric vehicles trend. So now, of course, the common trend is AI, artificial intelligence. And but beyond just that, beyond just the global geopolitics and stuff, very much many times is the valuation, right? The valuation of the business, the valuation of the company. The valuation is good, that's where the smart money is you invest in. So following the smart money in terms of investing has its advantage because firstly, they too uses tools like fundamental analysis, like technical analysis. But beyond just using such tools, they are being supported by their track record, supported by using technologies, right? So it's not just pen and pencil, reading books and reading financial analysis, but using AI as well. There are hedge funds out there who primarily uses computing algorithm to sieve out investment opportunities. So that is also one of the potential for us to follow the smart money. So next, how do we then use this smart money analysis to identify potential stocks? Okay, so take example of this. This is what happened recently 2 weeks ago. Okay, 2 weeks ago, if you follow the Singapore stock market or you follow the Singtel stock movement, of course, Singtel, many people will feel that it is a boring stock. Most of the time, I probably don't look at it, but because of my work, I will definitely need to look at it at least once a week, how the price is doing. So 2 weeks ago, there's a sudden spike in Singtel prices because there's this piece of news that from the Australian news outlet to say that Singtel may be selling Optus. You all know that Singtel owns Optus, which is a telco in Australia. So this news actually causes some excitement because the valuation of Singtel is actually pretty low in comparison to the valuation of other telco listed in Australia. So if they were to sell Optus, then there may be some revaluation in the Singtel share price. So, but of course, shortly after this rumor is out, Singtel came out to debunk it. And then they say that no, they are not talking about selling. They say that Optus is an important part of their business strategy. So, but what happened to the share price? The share price actually did not drop back down because many times, whenever there's a news or rumors that spike up the share price, and then when it's being debunked to be not true, the share price should usually fall back, but not for Singtel. So something more could be going on. So for those looking at technical analysis, we can see that Singtel has been in a consolidation phase, forming a symmetrical triangle over here. So now it's bordering near to the upper boundary of the triangle formation. So about a week ago, Singtel also announced this news that they will launch cloud computing offering NVIDIA AI chips. So it is something like AI AI as a service, something like that. Right? You can check out the news. So perhaps right is beyond just I think there's some analytical report you can read up some are speculating that perhaps Singtel is not selling Optus fully, but perhaps they may sell them partially to raise up funds or to unlock the share value. And then also together with this piece of news that they are moving beyond, because we all know that the problem with Singtel is that it's in a business that is being squeezed up with margin because of high competition. Every year, you almost that they have to launch better product, faster product at a lower price. So it is very competitive. So in that way, they need to grow beyond telco in order for the company to get on to growth again. So perhaps this piece of news, if it comes true and if they're able to capitalize on it, may actually cause there to be a revaluation or growth to come back to the Singtel again. But what is the smart money actually doing? That's what I'm more interested in. So as I mentioned, the blue line is the smart money. The gray line is the price of Singtel. I've also drawn out in purple line the symmetrical triangle. So smart money since early 2023, they have been mostly seller of Singtel. So the Singtel share price has mostly been stuck around. In fact, prior to this, I almost thought that Singtel is going to break below the triangle and go slower. But after the piece of news is out, and then we see that the smart money started buying Singtel, right, as it crosses the key resistance level. So perhaps this may give some hope that the price of Singtel may go higher. And this could be true in a sense because we do notice that since the start of COVID, Temasek has been, Temasek basically is an investment arm of Singapore government. They have previously been a more passive investor when it comes to all these local listed blue chip stocks. But since 2020, we see that they have done quite, or rather they kickstart or facilitated certain deals like the breaking up of the separating the Sembcorp, Marine, and later on the Keppel Corp with the Keppel Oil and Gas businesses. And perhaps now that they may have their eyes set on Singtel to do something about it, right? So that could be what we can look out for. Right. Next is geopolitics. This piece of news about is what we are familiar with since October last year until now. The geopolitical landscape in the Middle East, the conflict between the Israel and Palestine is still ongoing. Sometimes there's more escalation. Sometimes there's news of peace. So before anything gets confirmed, right, we know that this is an area that turmoils will continue. And that actually does have an impact on the oil price, right? Anything that, any turmoils that happen in the Middle East always will have an impact on the oil price. And we do see that the oil price have been rising up since early January until now, from low 70s until now to the low 80s level. So this is another piece of interesting data, right? It's called a commitment of traders report. So basically, it's something like a smart money as well. The commitments of traders report basically every week. The professional traders, the corporates, they have to announce their buying and selling activities on the commodities markets like crude oil, like gold and silver and such. So for this crude oil, we can see that since January, the green line here is the activities of the large speculators. They are the professional money managers, but in regards to this crude oil market. So we can see that since January until now, the green line has been gradually trending up, right? Not a lot, but it's moving up. So that also coincides with the upward tick of the crude oil prices, and primarily because the large speculators, the professional traders, they are buying, right? So using that as a basis, I also about sometime last month I did share about this idea during one of my webinar, uh, uh, which is investing in energy sector stocks in Singapore, right? But sad to say, we do not have any blue chip stock that is, part of the STI stock that is in the energy sector, but we do have a couple of small and mid-cap stocks in the energy sector. So firstly, looking at the energy sector index, we can see that since early Feb, it indicated that smart money has been buying into this sector in general. So under the energy sector, there's about 4 stocks that I do cover, that I do follow in terms of the smart money analysis. Okay, the first one is Dynamic, right? Dynamic, and you can see that since early March, the smart money has buying. So the way to use a smart money is also pretty similar to charting, right? We look out for support resistance. We look out for breaking up of trends, uptrends and downtrends. So breaking out of uptrends is good news, right? Follow on with the increase in prices for the Dynamic. So when during this period of early March, when the broke up happened, so Dynamic was trading somewhere close to 30 cents. Now it is trading somewhere around 36 cents. So there is an upward move of about 20% within a month. Right, so and Geo Energy Resource is also another stock that I mentioned before. So the breakup, the up move by the smart money actually happened way much earlier, back in early December. So that's almost like when the conflict first started off. Then you have the movement on these Geo Energy Resources. Geo Energy Resources actually is a coal mining company. It's not really dealing in crude oil, but nevertheless, it is energy related. So since then, the share price of this Geo Energy has been rising from about 27 cents up to a recent high of about, recent high was around 42 or 43 cents before it corrects down. There was a news announcement in terms of its results. It's not is below expectation, and the share price actually corrects back down towards the support level of 35 cents, right? But I want you to notice what the smart money has been doing. Even though the share price correct, the smart money actually step up their buying on the stock, right? So that's why you see the blue line keeps going higher. So this kind of setup is what I actually do prefer to look out for, which is that there's some disconnect between the share price and what the smart money is doing. And many a times I have noticed this enough, that is that the share price will tend to subsequently follow what the smart money is doing. But like I say, it's not 100% foolproof. There do have times that the smart money got it wrong, and when they got it wrong, they will then reverse to sell their position. Okay, so but not all energy stocks tends to benefit from this. Take for example this Rex International, right? Rex International did not really, the price did not really go up despite the oil price trading higher, every month, right? So that's why by using smart money analysis, then it tells us that even for all the energy stocks, I only want to invest in the one that the smart money is investing in. Right, so if the smart money is selling, I'll look for a better player. The next stock, RH Petrogas, similarly, the same case, smart money is selling, so the share price is coming down. So even though oil price is trading up, I want to invest in where the smart money is investing in. So which is for the moment, Dynamic and the Geo Energy Resources. Of course, the market is still in play, right? So things may change. So, and that is the reason why this is also, as I mentioned later, I'll share a little bit more part of my service for my client, which is generating a weekly report to highlight to them the smart money actions. Okay, so the last talk of the day, just for you to take away to pay attention to this stock. It hasn't really moved yet, but Thai Bev has been one of the market darling maybe a few years back, but since COVID, it has not really been able to perform, right? But on the chart wise, you can see that it has been trending downward in this downward channel. But if just by using technical analysis, you can see that if you want to buy Thai Bev Okay, basically, just take note that this is on a weekly chart. Every single candlestick here represents 1 week. So if you want to buy Thai BEV, you don't buy it when it's trading at the stochastic high region, right? You don't buy it when the stochastic is high. Okay, you don't buy it when the stochastic is high. We buy on when the stochastic is low. So even though over the past 2 to 3 years it's been trending down, if you were to just follow this simple rule of stochastic on a weekly chart, buy when the stochastic is low, right? You still are able to gain some profit, and even if you didn't gain some profit, as in you didn't sell or take the profit, it's still much better on, right? As in your performance still much better than when you were to buy it when the stochastic is high. So the stochastic was low in late 2023, and then now is halfway there, right? But the good news is that the share price did not really go up. So yeah, so we can wait and see, right? Either wait for the stochastic to get back low again and buy, or even if you choose to buy at this region, it is trading very much to the low point. So which is good news, given that the stochastic had turned up from the oversold region just 2 to 3 months back. Right, but like I say, what's the smart money doing? That's what I'm more interested in. So the smart money, as you can see, has been generally seller of Thai BEV, right? So there are period of time whereby they buy up, the Thai BEV stocks goes up, but when they sell off again, the Thai BEV stock has been coming down. So thereby, it's also a great indicator to help us know what stock to avoid, even though this is a stock that you like and believes in, right? But by adding on this additional indication, it can help us to avoid buying it when it's high and only buying it when it is low, when also buying it when the smart money is buying. So for some reason, there is a spike in buying 2 weeks ago Thai BEV by the smart money, right? I searched around, there's a piece of news on the SGX website regarding them incorporating some of the subsidiaries. There's some changing of hands in share price, left to right pocket between the Thai BEV, the family that owns Thai BEV. So I'm not sure what's the impact as of now, but the development on what the smart money is doing does look interesting. So I'll be keeping this stock on a lookout. So if you're interested, you can also put this up in your watch list and just search for their news once in a while, and see what's going on. Right. Sooner or later, if deals are going on, they will have to announce the news. Right. So I've come to almost to the end. So now I just want to share about what this smart money is and what I can do for you, right? If you sign on to become a client of mine. Basically, all my clients for now until the for the entire year of 2024 will receive this smart money report STI version free of charge. Okay, there's two versions of my smart money report. I will share on more about the other version. So for those of you who attend this webinar today, right, if you were to open an account, right, you will get a free subscription to this weekly smart money report for the next 12 months. So meaning, okay, I'm not going to count much. So from April onwards, all the way until the end of next April, if you open an account today or this month, you will be receiving this weekly report every single week for free for the next 12 months, right? So how we can get hold of this is by scanning the QR code and just fill up the form to open an account with me. Okay, I do mention that, but because I mentioned 12 months, right? So what happens after 12 months? Do I suddenly just stop offering this service? No, but of course it's free for first 12 months, but subsequently there are some criteria for you in order for you to continue to receive these reports. So for the STI version, right, it will be automatic renewal for continuously for the next 12 months, right? If you were to do trading using this account and incur around more than about $500 in commissions per year for the entire year, $4 for an entire year is probably only about $40 per month. So all this is just to support me for generating this work to support you in your investing. So, but what if there are those of my clients who are they don't want to chase after the trading just to hit the 5 marks, and also they want to be able to get the other version, which is the full version. So the STI version covers only the 30 STI stocks and of course the STI index and the sector index. The full version, apart from the STI index, the sector index, and the 30 STI stocks, also cover other small and mid-cap companies, about between 50 to 60 of them, and whenever any of these companies shows up buying activities or buying buyers by the smart money, I'll be including them into this full version, right? So for the full version, those who open a securities advisory rep account, or they open a managed account with a minimum 50K AUM, they'll receive this free version, full version free of charge. Right, so there will be like no 12 months as long as they maintain this account with 50K AUM, they will continue to receive this full version for free. So if you're interested to find out more about this securities wrap account or managed account, how it works, you can just message me privately and I will just explain to you more. Right. So beyond just the weekly smart money report, this is also the list of other services I provide to support you as an investor as you navigate this market. So firstly, this smart money analysis is pretty new to many clients. So for now, until the end of the year, I'm holding a monthly webinar on the last Thursday of every month. So the next webinar is on the 28th of March, which is 2 days later. So during this webinar, it will be about 1.5 hours time. I'll be explaining how to use the smart money, sharing about the latest news, latest development, what stock to look out for, and also sharing with some other analysis methods that I use, that either technical analysis or fundamental analysis that I use, and they can use them to better enhance their investment journey or better enhance their decision making. So also beyond just the smart money report, the webinar, I also have WhatsApp report that my clients can subscribe to. So these are the list of the WhatsApp services. I will not just be sending out WhatsApp messages to all my clients, only if they request for it through the subscription by telling me which particular services they prefer, then I will just sign them up for it. Okay, so lastly, this is my contact details. You can also scan the QR code, or you can take note of my email or my contact number and contact me if you have further questions regarding the market or regarding my services. Okay, so now I'll move to the Q&A sessions. Let's see if there's any questions. Okay, the question from Mr. CJ Ng asks, what are the components or formula of your smart money index? Okay, sorry, it is proprietary, but I would say that the data has been gathered from a few sources, to which the SGX website, the TradingView platform is one of it, right? So these are not medical, as in mathematical formulas, but rather they are just real data on the real money or funds being committed to any particular stock. Okay, from Mr. Lim, he asked, will Citron benefit from the increase in oil price? Okay, Citron, they are sort of, it will. Part of their business, they are trying to move away into clean energy, into this offshore wind farm. So it is related. When the oil price is high, you make all this renewable energy more viable, right? But of course, the problem with Citron right now is that they need to get back into profitability. So which they are not yet. based on the last announcement, it seems that it's still a few years away. So, but good news for them is that they are increasing their order books. Let's just hope that this order books actually turns into actual revenue and then actual profits, and also that they don't get into any more, those scandals, right, in terms of the corruption scandals. So let's say if they put all this behind them, no more having to pay fines, no more having all this negative publicity. Yeah, Seagen definitely is one of the stock that may have interesting play coming up. But as of now, the smart money have been selling Seagen. So yeah, so for me, wait till I see the smart money buying before I buy into it again. Is demo account free? Yes, demo account is free. In fact, opening an account is also free of charge. You need not fund in to open the account. But if you want to try the demo, yes, you can do that as well. Is your coaching chargeable? The coaching is free of charge, so it can be done via Zoom or face-to-face, depending on your preference. Okay, from Mr. Ng again, did you come up with the Smart Money Index or you subscribe to some other service provider? I come up with the Smart Money Index myself using Excel tables formulating, right? So it is pretty manual work. Every week, probably I'll take up half of my day tabulating the data and then generating the report. So most of the time, a report is sent out either late Monday night or sometimes on Tuesday morning or afternoon, right? So let's see, I think I've almost complete questions. Okay, so come to the end of today's webinar. So thank you for your time. Thank you for being such a wonderful audience, right? If you do have some questions that you come out later on, right, you can always write to me on email, right? And then I will make sure to get back to you. If you are interested in opening an account to subscribe to this free weekly smart money report services, you can scan the QR code here and then follow the instructions to open the trading account. Coaching page. Yeah, so if you are interested to register for one-on-one coaching, you can scan this QR code here and it will direct you to my coaching page. Okay, thank you for your time. So do scan this if you are interested to register for a demo or you want to find about upcoming webinars or to open a trading account. Thank you.